$3.7 quadrillion. That's how much money flows through one single company every year. And last month, the SEC basically told them, yeah, go ahead. Put it all on blockchain. Now here's where it gets interesting. In that same window, WisdomTree drops a report calling XRP the institutional payments powerhouse that big players want. And SBI Ripple announces they're deploying XRP cross-border payments between Japan and Korea, targeting a $77 billion trade corridor. 3 moves, same timeline. And I don't think it's a coincidence. So let me break down what's actually happening here, because the real story is not what the headlines are telling you. Okay, so WisdomTree, $150 billion in assets under management, just published this report called Bitcoin versus XRP, right? And they're basically arguing that while Bitcoin is digital gold, XRP is the institutional payments workhorse. And yeah, the data backs it up. 1,500 transactions per second, 3 to 5 second settlement, eliminates the need for pre-funded Nostro-Vostro accounts, which, by the way, locks up an estimated $27 trillion in dormant global liquidity. That's real money sitting in correspondent banking accounts doing absolutely nothing. But here's where it gets really interesting, and honestly kind of contradictory. WisdomTree withdrew their US XRP ETF application on January 6th. Just pulled it. 7 weeks later, they published this glowing report. So what's going on? Well, I dug into this, and here's what I think most people are missing. WisdomTree still runs the cheapest physically backed XRP product in Europe, their ETP at 0.5%, undercutting everybody. ETC Group charges 1.95. CoinShares charges 1.5. So this research report, it's not about the US ETF they abandoned. It's content marketing for their European product. But the real move, the one that matters way more, happened the day before this article dropped. February 24th, the SEC approved WisdomTree's tokenized Treasury Money Market Digital Fund for 24/7 trading. First mutual fund in history to get that approval. Their CEO, Jonathan Steinberg, said it himself, quote, "This is bigger than asset management. This is really about financial services." So here's the real takeaway. WisdomTree isn't betting on any single crypto ETF. They're betting that the pipes, the tokenization infrastructure, the blockchain settlement rails are more valuable than the product. The XRP report makes them look like thought leaders, while the real money is being made on tokenized money markets. They went from 30 million to 750 million in tokenized assets in 1 year. That's a 25x increase. That's where the smart money is actually flowing. Before I get to the next story, quick question for you. We just talked about WisdomTree betting on tokenization infrastructure over individual crypto products. Do you think that's the right call? Or do you think the ETF race is what really matters for adoption? Drop your take in the comments before you hear what DTCC is doing, because it might change your mind. Now, if you're not familiar with DTCC, you need to be. This is the Depository Trust and Clearing Corporation. They settled $3.7 quadrillion last year. They hold custody over 100 trillion in assets, 1.4 million securities. Every stock you've ever bought, it cleared through them. And in December, the SEC gave their subsidiary, DTC, a no-action letter authorizing a 3-year pilot to tokenize those securities on blockchain. We're talking Russell 1000 equities, ETFs, US Treasuries. Their head of digital assets, Nadine Shakar, said the goal is to, and I quote, "tokenize all 100 trillion in custody that we have." Let that sink in. They also partnered with the Canton Network to tokenize US Treasury securities. And here's the kicker. DTCC co-chairs the Canton Foundation alongside Euroclear, the two largest post-trade infrastructure providers on the planet, are now jointly governing a blockchain layer. But, and I got to keep it real with you, there's a legitimate criticism here. A Galaxy research analyst put it bluntly, quote, DTCC is trying to avoid having their position usurped by co-opting the only tech that can feasibly threaten them. And honestly, that tracks. Because here's what DTCC is actually building. They rejected blockchain bridges entirely, too risky. Instead, they use a burn and mint methodology. Tokens get burned on one chain, reissued under DTCC's control on the destination chain. They maintain a root wallet on every approved blockchain with override keys that can mint, burn, or transfer any token, even without the participant's private key. So yeah, blockchains are basically just databases to DTCC. They're the trust layer above all of them. The monopoly doesn't die, it just goes multi-chain. Ondo, Securitize, Figure, they're all building tokenization on specific chains. DTCC is building above all chains. And that distinction actually matters a lot. So SBI Ripple Asia. For context, this is a joint venture. SBI Holdings owns 60%. Ripple owns 40%. And SBI CEO, Yoshitaka Kitao, this man is all in. SBI owns 9% of Ripple Labs directly. He called Ripple a, quote, pillar of SBI Group's earnings. That's a $60 billion financial conglomerate saying a crypto company is a core profit driver. Now, the announcement itself is a research initiative with DSRV Labs, a Seoul-based blockchain infrastructure company backed by Samsung Next. They're evaluating the XRP ledger for cross-border payment and settlement between Japan and Korea. And the numbers here are staggering. Japan-Korea bilateral trade, $77.2 billion annually. The remittance corridor alone is probably 200 to 400 million. But Kitao isn't thinking about remittances. He wrote an essay calling 2026 the year of the, quote, battle for the settlement layer. He's targeting the trade corridor. That's 38 times larger. But here's the insight that I think connects everything we've talked about today. SBI is launching RLUSD, Ripple's dollar stablecoin, in Japan this quarter through SBI VC Trade. They're also launching a yen-pegged stablecoin in Q2 with Startail Group. So picture this, RLUSD on one end, yen stablecoin on the other, and the XRP ledger as the bridge between them. XRP becomes a millisecond duration bridge asset that neither sender nor receiver ever actually holds. The volatility objection, gone. And the timing is surgical. Japan's FSA is reclassifying crypto as financial products under FIEA. The public consultation closes February 27th. That's 2 days from now. Tax rate drops from 55% to 20%. This announcement was timed to demonstrate market readiness right before the regulatory window closes. So look, 3 stories, 1 pattern. WisdomTree is betting on tokenization rails. DTCC is absorbing blockchain into its $100 trillion infrastructure. And SBI is building a full-stack stablecoin corridor on the XRP ledger between 2 of Asia's largest economies, right as Japan rewrites its crypto regulations. The common thread? None of this is about price. It's about plumbing. The institutions aren't asking, will XRP go to $10? They're asking, can this technology move trillions faster, cheaper, and with less counterparty risk? And right now, the answer from multiple directions is yes. That's the story nobody's telling you. If this helped you see the institutional picture more clearly, hit subscribe. And tell me in the comments, do you think traditional finance is adopting blockchain to innovate or just to protect their monopoly? I genuinely want to know what you think. I'll see you in the next one.